Hello and welcome to another update video here on this channel. In this technical analysis and trading tutorial, I want to talk about how you can set a stop loss. In recent videos and in comments and also on my other channel, I've been asked about, how do you actually set a stop loss and where? And that's the most important thing, where. So I want to talk about that in this video. And the thing is, when you do trading, in my view, and this is only my view, so this is not financial advice in any way. You always have to come to your own conclusions. I only show you ways how to do it, but essentially a lot of where you set your stop loss also depends on your own risk profile, your own goals. So I can't give you a universal point where to always set a stop loss, but I will explain to you how to work out where to set a stop loss and how important it actually is. So first of all, whenever I enter a position and when I do trading, I have to have a predetermined stop. I have to know where I'm getting out of the trade before I get in, because this is the last point when you're actually objective. As soon as you are in a trade, you stop really being objective. You really get emotional. A lot of things happening here in your body and so on. And as soon as you're in a trade, you're biased. So ideally, when you do trading, you want to know where to set the stop loss before you buy. Yeah, that is one important thing I want to mention to you before we go and start here. And also, you should not set a stop loss based on the idea. Let's say you invest $1,000 and you say, all right, I'm willing to lose $200. That's why I set a stop loss at this point. That's not how you do it. You always have to set a stop loss behind a technical barrier. Yeah, behind a support line, behind a resistance line, behind a breakout point. You can see that down here. And I will get into it in more detail in a minute. Just want to mention a few, let's say, basics before we start. So first of all, you have to know where to set the stop loss before you enter a trade, and then always set it behind a technical barrier. That is very important, and don't base it on how much you're actually willing to lose. And also when you set it behind a barrier, like a breakout point, like a support line, like a resistance line, you want to know or you want to hide it far away enough that it doesn't get triggered easily, because there are fake outs. You see these long wicks here. You see, when you have fake outs like here, for example, you could set, for example, when you're in this downtrend, you could have potentially set a stop loss somewhere here. But with this fake out here, it would have been triggered. So hide it away far enough that it doesn't get triggered accidentally. And that is important. So it's always important to place a stop at a point that if it is reached, it will normally indicate that the trade is really wrong. Yeah, that it is wrong. It doesn't get triggered, that you don't want it triggered by any sort of fake out where others can get hold of your assets cheaply. So then what to mention is, I said you need to determine where to set the stop loss before you actually enter the trade. And then as soon as you enter the trade, also set your stop loss. That is very important. Actually, trading, in my view, isn't real trading without a stop loss. A stop loss really prevents you from making, well, it doesn't prevent you from making wrong decisions, but it certainly protects you. And professional investors or professional traders always use stop losses. It's just important to manage your risk, because otherwise you could risk it all. You can risk your whole budget, and to be honest, you never get any trade right. You never get 100% of all trades right. Actually, you're quite good if you get 60, 70% of trades right. So the other ones, they will all be probably, they will all be closed based on the stop loss. But if you don't have a stop loss, basically, you're just hoping that the price will go up, essentially, and that is not how you do trading. Okay, so let's go right into it. I want to show you a few examples here how to set stop losses, for example. So we've got a first example here where you come up from this downtrend. Basically, you are in this downtrend, find support at this line here, and from there on you go up. Then you've got a breakout point here that you have determined, and this is when you could potentially enter here in a long trade. Yeah, because this is the breakout point. I'm a breakout trader, so I would always trade after a breakout happens, not necessarily before. Before, I could put it into my, and we're talking about cryptos here, I would put them into my long-term portfolio, just basically dollar cost averaging in, but that's not trading, right? So we need to talk about the difference here between, let's say, dollar cost averaging in, without a stop loss, where you just buy regardless of the price on a weekly or monthly basis, or trading. If you're doing trading, where you have a goal as well, where you say, okay, I'm happy to actually take profits at this point, then you need to set a stop loss. Day trading or swing trading, where you do trades every other day maybe, or it depends on your time frame as well that you're trading. But if you do trading and you want to sell, you have a predetermined goal in mind as well when you want to exit potentially, then you need to set a stop loss. Okay, so you've got this breakout point here, you have a move to the upside, and there is always a risk that we could come down once more. So there's two possibilities here in my view how to set a stop loss. There are ways to do it, different ways, and you can set it, for example, below this previous low here, and ideally you want to go maybe in the shorter term time frame to see more clearly where you could do it. But if we just take a look here, you can see that after this last low that we formed here, we came down once more, and you see the wick here, right? You can see the wick here, and after that we break out. So there is no retest in this instance, but if there was a retest, there could have been the risk that we come down to that wick once more, potentially in a sort of a fake out, and then go up. Yeah, so you want to avoid that these fake outs make you or trigger your stop loss. So I would always set it somewhere below this most recent low, yeah, and hide it away far enough that a fake out doesn't trigger it. Somewhere here maybe. Yes, that increases you in case the trade was wrong. That would increase your loss as well, but that's just what it is, and that always determines, that all depends on your personal risk profile. Many traders, they set it here at the breakout point, but that is a mistake in my view, because the price very often comes back to the previous levels and maybe even overshoots it a little bit, and then it triggers your breakout point. Many traders try to set the stop loss at the break-even point, that when they enter, that they basically can't lose any money. But that way, basically, in my opinion and my experience, never works, because you will reduce your chances of making money significantly, because very often the price retests the previous level and then you get shaken out. And that's it. And some traders, people who might be willing to maybe afford to lose a little bit more and are more, again, it depends on your risk profile. But if you're prepared to lose a bit more in the worst case, but you're basically sure that the price won't get below this low point, because you can see this was a very, very important support level here at $1. You hit it various times. You could also set the stop loss below this this level. So you could basically say, okay, if we come back into this range here once more, that's fine. But I'm happy to wait, and maybe there'll be another attempt to break out again later. But I definitely want to get out if it drops below $1, maybe at around 98 cents or 95 cents you could set it, because if it drops below that, then definitely I'm out, guys. Then I'm out, because then it could fall much, much more. And you can see that here, we've always found support here at the $1 level. So that might be another way of setting a stop loss. Now, to be honest, that would be quite far away from the breakout point at 150. But it is a possibility. And it depends on your personal strategy. It depends on how long you want to stay in the trade, how patient you are, and if you, how often you trade, basically. Because if you want to work, if you say, okay, this trade doesn't work out immediately, I want to get right onto another trade, then you probably would set your stop loss a bit higher. But essentially, you always want to hide it far away enough that it doesn't get triggered easily by a fake out. Okay, so let me show you another example. We are here on the 1 hour chart, and basically this is the same example that we just had. We've come out of this this uptrend here. We broke through to the upside, and then we can identify here a trend line, right? So you have a trend line here, very well defined. Nearly one touch here, then we had a touch, had another touch here, had another touch here. So let's say we come down to that, we come to that level, and you think about getting into the trade at this pullback to the trend line. So where would you set your stop loss? Again, we've got a technical barrier identified here, which is that ascending trend line. And what I would do, again, I would set it at some point below this trend line here. Yeah, I wouldn't set it at the trend. I wouldn't set it exactly at the point when going into the trade, because the risk is that we come down once more, as we did here. Yeah, you can see that we actually went through the trend line, and even though the body of the candle closed above it, we tested lower levels. So you don't want that this messes up your trade, and you don't want to set that, that's what I mean, you don't want to set your stop loss too high, because by these fake outs, it could be triggered and then you would have lost out on these nice price increases. Okay, so that is why I would set it somewhere hidden, again below that barrier. There you go, maybe somewhere here, far enough away for a potential fake out. Yeah, that is just something you need to determine at what point. Maybe, you know, we have a previous low here, maybe that would be a point to use. You know, look for some points. Some people also use moving averages. So if I go back to the daily, and you can use different moving averages for that. Basically on the daily, we're at this trend line here, and you could also use, instead of using that previous low, you could use the moving average here, which is the 20-day moving average. Now you could also use the, let's call it the 9 or the 10-day moving average. Let me just change that. Let's see how the 9-day, which is a standard one as well, how the 9-day moving average looks. That's probably a bit too far within the price range, but I guess the 20-day moving average would have been fine here, because it is basically below the price action. It's basically hidden below this technical barrier, and I guess in this case the 20-day moving average would have been fine. But many people, to determine their stop losses, so you would have set it somewhere here, pretty much, yeah, pretty much at the lower support here, the previous low that I showed you. And that's pretty much what you do. You want to avoid that you set your stop losses too tight. Always wait for the breakout. That's what I recommend. And then it depends on your personal risk profile if you want to set the stop loss very tight, or if you want to let it a bit loose, as in the example down here, where you actually set it below $1. And again, that there is no universal rule, but what is certainly wrong is to say, right, I constantly adjust my stop loss. I always want to have it as a certain distance to the current price. I wouldn't recommend that. I recommend to adjust your stop loss regularly, yes, but always look for new barriers. So let's say you went into the trade down here, yeah, and you set your stop loss somewhere here, and the price goes up, pulls back again to that line. From then you can observe we go up further. Okay, then I would adjust my stop loss and put it somewhere here then. Yeah, and then maybe you can see, right, we're going even up higher here. Then you can pull up your stop loss below the most recent low, and that would have been protected you then, because when you saw the market roll over, then that would have triggered your stop loss. And the problem a little bit in cryptocurrencies and crypto trading, which is, you know, what I do in my other channel, the problem is a little bit that many people have their coins on wallets, you know, and they can't really set a stop loss. Now that is a problem. If you really do trading, short-term trading, you need to do it on an exchange. You need to set your stop loss. You know, if you have open trades, you can set a stop loss easily on Binance, on KuCoin, for example, on other exchanges like FTX. But if you have it in your hardware wallet also, I don't think you can set a stop loss. At least I haven't found a way to do it. But generally when trading stocks and shares and everything else, it's very important to set a stop loss. And when you really want to get some short-term profits in crypto, I think you just need to find a way to set a stop loss on your exchange. And if you want me to do a video on that, let me know in the comments. Then I will show you a few examples on various exchanges. All right, hopefully you liked the video. If you did, please smash the like button. And if you want to follow me on this TA journey, then please subscribe. Thanks a lot for watching. Bye-bye.